Welcome back, everybody, to yet another episode from Coin and Capital. I'm your host, Chris, and here we bring you macro, crypto, financial news, China news, US news, Canada news, whatever it may be having to do with finance, we talk about it. We show you guys articles, data, and then we break it down and deliver the truth. So today, we're going to talk about crypto. We're going to talk about this week, what happened in the markets from a technical standpoint, and then some major headlines that have come out, how that aligns with what we're currently thinking about the markets and where that's going to take us in the next 6 months. So buckle in. Let's get into it. Right, guys, right off the bat, Bitcoin, daily chart, few things happening here, okay? So Sunday last week, I said that we need to bust through that bearish fair value gap. So it would be this red box here we highlighted. So we needed to break through and hold that in order to see order flow flip from bearish to bullish, right? And we did that. Throughout this week. You know, we kind of hit a wall midweek, caught some sellers. That's okay though. Why? You see that yellow, those yellow three lines. That, my friends, is what we call a Fibonacci retracement. Okay? Fibonacci retracement shows you 50, I think it's like 60, and then 78% of that dealing range. Basically, retracement levels, right? So in a situation like this where we hit a wall and encounter some sellers in the market, we can deploy this fib to find appropriate spots where the market is most likely to retrace. And believe it or not, it is that 78%. So the bottom yellow line is the golden pocket, guys. That's where we want to see price reverse, which it did, breaking back again through that bearish fair value gap, supporting bullish order flow, guys. Okay, technical analysis literally doesn't have to be that hard. Okay, a box and then a fib. That's all you need, guys. A box to show premium discounts of the dealing range, and then fib retracements to show retracement levels, right? 50, 62, 78%. That's all. That's it. That's all you need. Okay? So what does this tell us? This tells us Bitcoin is holding bullish order flow, and we should see price begin to pick up, shooting A for this local high, and then B back up to all-time highs. Okay? That's Bitcoin on the daily. Now, checking in on Wall Street. To the right of us, we have the S&P 500, new all-time high. What's new? What we can tell from the S&P 500, okay, literally 95 to like 97% correlation with US M2 or global money supply. And so when the S&P makes an all-time high, M2 usually right around there, okay? More debasement, right? If the S&P is going up, so is M2, right? Debasement occurs roughly around 8% a year. Tack on some inflation, there's the whole return of the S&P in the year. On the left, from The Guardian, Wall Street and FTSE hit record highs after U.S. inflation report fuels interest rate cut hopes. Haven't we been talking about the Fed ending QT on this channel last week? Now, hopes and dreams that Powell will cut rates are surfacing. Guys, it is no coincidence that the S&P is all-time high and that the Fed is looking to cut rates. Why? 4% interest rate on $37 trillion in debt, and then the US needing to reshore ASAP. Okay? S&P will keep going up, money will be printed, inflation here to stay, nothing new there. Back to crypto. Okay, we're looking at Solana on the right. This is the weekly chart. What can we tell here? Oh, guess what, guys? Guess what? Boxes and Fibonacci, right? We haven't really moved out of that weekly discount that we tapped 2-3 weeks ago. And guess what? That lines up, right? That lines up with the 78% fib level. What does that tell us? Well, this green candle tells us we found buyers to support and buy at a discount. So we should be looking for Solana in the next few weeks to come up to these local highs and then eventually run all-time highs. Why? On the left, bear with me, Fidelity Investments, a financial behemoth managing a staggering $5.8 trillion in client assets, sent ripples through the cryptocurrency market yesterday on October 23rd, 2025, with the landmark announcement that it has opened access to Solana for its vast client base. This strategic move, which allows both retail and institution clients to trade and custody their SOL directly with their Fidelity accounts, marks a pivotal moment for the high-performance blockchain and the broader digital asset ecosystem. The immediate market response saw Solana's price rally, signaling strong investor confidence and igniting discussions about the potential for traditional finance institutions to spearhead the next major price leg up for leading altcoins. Solana is all I care about this cycle, guys. The narratives behind Solana, the builders on Solana, are all there, right? Plus, when we dig a little bit into the price modeling behind Solana, it's right at that exponential cusp of its adoption curve, just like Ethereum did last cycle, right? When we pair those three together, it's a recipe for at least a 5x from here. Because think about it, when people onboard into crypto, where are they going? Oh yeah, bro, let me get your AVAX. Let me get you hooked up on AVAX or get you some of this XRP blockchain. No, guys, they are going to the Solana casino. Even though it's a casino, it is on Solana, right? It's Solana, it's Bitcoin. If they have some money, it's Ethereum, okay? A lot of people don't have money, so it's Solana. You get it now? On another note, positioning yourself in quality altcoins where we have buyers willing to buy at a discount because of strong narrative, strong fundamentals is crucial if you want to ride out this bull market effectively. Why? Because we have coins like this is Avalanche, that literally have they have nothing. When was the last time you heard about somebody building on AVAX? I don't know. I don't care. And that blue line was the bear market bottom from last cycle, by the way. So what happened? AVAX came down and wicked it, and well, there's no buyers. There's no buyers to take the other side of all the selling pressure right now. Why? Because the narrative behind these coins suck. Extremely bad. They're so bad. This is why curating quality allocation decisions and positions early in cycles is crucial, right? Because if you're left reading narrative hype, you get stuck holding Holding crap like that. Holding crap like AVAX and XRP. Like, bro. Come on. Come on, man. Next up, JPMorgan to allow institutional clients to use Bitcoin as loan collateral. Oh, man. Oh, man. This is where things get fun. On the left is my research fund's newest model that I've been teasing throughout some of these videos. It's the Bitcoin gravity well, where we measure the depth to which Bitcoin is being used as collateral in financial systems. And this gives us a read on how we expect markets to behave. Okay, let me explain that a little bit more. So we have two components here for the Bitcoin gravity well, the BCR, so the collateral rate, and then the velocity of that collateral. So when velocity is high, but collateral rate is low, which we're in right now, we get market structures and behavior with leverage-fueled rallies, which makes sense, right? When we look at it, what are these traders trading? They're trading perps, right? They need funding, and they get exhausted within a week or two, which we can tell by this gravity well reading, right? However, now that JPMorgan has said what he said, we should expect the BCR, so the collateral rate of Bitcoin and Ethereum, right? This includes Ethereum as well. We don't really talk about that. We should expect the BCR to rise, right? And we should expect more sustained rallies as more Bitcoin gets used for, you could say, more mature collateral, right? Not 20x perps on Jupiter, right? That collateral velocity may stay high. It may come down a tad bit too, right? As people drift away from perps just a little bit to resort to, like I said, more mature collateral, right? Especially as TradFi gets pulled into crypto. Next up, final slide of the day. We have a couple things going on, guys. On the left, spot Bitcoin ETF flows. Institutions are still buying, right? Positive inflow days for the month still outweigh the outflows. So net inflows are positive on the month. Top right, the crypto renaissance, institutional adoption and stablecoin growth as catalyst for mainstream acceptance. JPMorgan to allow institutional clients to use Bitcoin as loan collateral. Adoption and stablecoin growth as catalyst for mainstream acceptance. Guys, institutions are here to play. They're here, bringing trillions of dollars in capital, right? And you're buying stuff like AVAX. You're buying XRP. You're buying Retardio. Like, bro, make it make sense. Make it make sense. Institutional adoption accelerating. Survey shows 75% plan to boost crypto allocation, 59% targeting, 5% assets under management, over 5% assets under management. Summary, a report shows large institutions are committing to higher digital asset allocation, fueling capital flow momentum. Guys, pick better coins. If you don't know how to pick better coins, ask somebody, right? Come to me, talk to me, talk to other people, maybe do some research or read my research. That's what it's all about, guys. We find the most high quality allocations during, before, after cycles and give it to you. So you don't have to go out there busting your butt going through all these reports and data, right? We do that for you. Come and talk to me, because if not, you guys are going to be left holding the bag and so upset that you missed one of the biggest wealth transfers in the world. Because I guarantee you, JPMorgan is not buying he's not buying Pepe, right? He's not buying Shiba. He's not buying your neighbor's meme coin, right? They're buying Bitcoin. They're using Bitcoin as collateral. They're staking on Ethereum. and they're longing Solana. Guys, get it through your head. Please, get it through your head. Bitcoin's order flow is bullish. Altcoin order flow is bullish. High quality alts will outperform. Higher beta is here to stay in capital rotations and institutional portfolios. ETF flows net positive on the month. Gravity well reading, still leveraged fueled rallies, okay? Remember, short bursts, however, we're looking for that to become sustainable. It's been real, guys. If you enjoyed this video, leave a like, drop a comment down below, let me know what you think. Let me know what you guys want to hear about next. I'm an open book, drop it in the comments, and as always, make sure to hit that subscribe button because we'll be back for the next video.